Advanced Money Destroyer. This stock, AMD, has been widely controversial in the investing community. Well, should you buy it today or no? We're here to tell you if you should or shouldn't. Before we get into the video, my name's Sebastian.
I'm Joseph, and we're here with Prime Analysis Investing. Just to start on this stock here, this stock reported quarter four earnings yesterday. So I want you guys to take in everything we're saying, get in your mind, what do you think the stock price should be? Should it go up or down while we're reviewing this information with you? Basically, they reported yesterday, top line with their revenue, beating these numbers with the 6 or 7% of Wall Street estimates by about 10.27 billion revenue versus 9.67 billion revenue. Their adjusted EPS, the bottom line item on the income statement, they beat that by about 16%, beating it by about 0.21 on a non-GAAP basis. Overall, this quarter looks unbelievably beautiful, and if you look at that revenue outlook for the next quarter, they beat the Wall Street estimates by here by about 5%, guiding for 9.8 billion revenue versus 9.4 billion revenue. I want everyone watching this video to think, is this a good stock? Is their guidance good? Did they beat revenue? And do they beat the net income, EPS margins, the three things that you should look at whenever analyzing a company's earnings profile?
All right, guys. So let's go through the income statement. Let's talk a little bit about the net revenue. Came in at $10.2 billion compared to 9.2 last quarter. That's about 11% rise in that, and that's great. Um, Total cost of sales went up a little bit. That's fine. Gross profit also went up by about 1 billion. That's also really good. Margin went up to 54% from 52%. You like to see that. Marketing went up slightly, about 1 million, 100 million. That's really not that bad in the grand scheme of things. If you look down at the net income, they beat about by about 21.5%, up to $1.5 billion from 1.2 from last quarter. And if you go down to basic and diluted EPS, they also rose that by about 20 cents per share. Overall, we give it an A plus for the balance sheet. They really have nothing negative except for some marketing and G&A increased costs, but besides that, it looks really good.
Yep, and just to reiterate on the net income statement, you can see that all the way on the top down, they're increasing. So their EPS is bigger than net income, which that is bigger than net revenue. So that shows that they're using their money wisely, cutting costs and not doing anything. So obviously, whenever you're looking at income statements, you're going to see that's a very good management team within Lisa Su there. Let's just go back and show how big of a beat this was from their last quarters. If you look up here, the best they beat on the EPS before was about 2.40%, even though they were consistently beating that every quarter. Lisa Su is an unbelievable CEO. She's a huge sandbagger, and she wants to make sure they beat those numbers. And then I want you to take a look here all the way down to the bottom line. This is also the biggest revenue beat that they've had in the last quarters. And like I said, this is the best income statement that this company's had in the last 2 years. Through all the sentiment I want to think that you've heard about on Twitter, people on CNBC saying this company has proved every single person wrong, having an 8x beat on their EPS compared to any other quarter, which is unbelievable. So now I want you guys just to think in your head, what do you think the stock price did today if you didn't look at the markets? This is unbelievable, this price right here and the action that's happened today.
So we want to talk a little bit about the move because they reported such a great earnings with A plus income statement, but the price is not reflected in the stock, moving down 17%, $41 a share today when the market opened. So what we want to kind of convey to you guys is that it really does not matter about all the short-term capitulation and any short-term external factors that are going on in the environment. Just because the company went down to $200 and 17% down does not make it a terrible company that people will not have to use now in the future. AMD is a very respectable and reputable computer chip company that people will use for decades to go, and they're just strengthening their supply and their company as Lisa Su and the team continues to expand. So, with that being said, just because the market right now and all software and tech stocks and the overall state of the market might be unclear, later down the road, once the market continues to go up, which it usually and always does, it will eventually go up, and you'll eventually see stocks like this that are set up very well with their income statement, that they will continue to pump their stock and move higher and outperform the S&P and other indexes.
And the next part, so we got in the video, should you buy this stock? Absolutely, 1000% conviction. This stock here is unbelievable. You're getting this at a discount. I want you to think of stocks like you're going to the store. Stocks and socks. If you go to the store on Black Friday, you're going to see your favorite pair of socks for this price that's 25% off, and it's the exact same pair of socks that you had before. In this case, it's almost like you're upgrading to a better pair of socks that are more comfy, and you're getting a lower price on it. I highly reiterate this here, and we'll show you our price targets for this stock later in the video. I just want to also run some numbers. So you might be asking yourself, hey, they put up 10.27 billion in revenue this quarter, but they're only guiding for 9.8 billion the next quarter. You do not want to walk around with your head cut off like Wall Street is taking this in. We are showing you this because a huge thing in listening to stocks is listening to their company call. Lisa Su stated in the call that they are only doing 100 million of chip sales in China. This quarter, the chip sales were 390 million, versus in the past they've even been up to 24% of their total revenue. They aren't guiding for it because they're not sure what Trump is going to do. So if you take these chip sales and you do 9.8 billion plus 300 million they should get, you get to 10.1 billion is honestly what should be their bottom line reporting. Since Lisa Su always sandbags, you should multiply that by 4%. So in there we get 10.5 billion as of right now is what we're expecting for revenue based on all the past earnings and adding these into their report. So we believe Wall Street is so wrong to sell off this chip company for no reason. And then just to touch on more things coming in the future, they have this thing called Helios, which is an AI supercomputing rack system. So this is basically an entire rack of pre-built liquid-cooled AI factory, and this is their answer to NVIDIA's Blackwell systems. This is something that ties this all together for the company. So instead of them having to go and buy AMD chips, then build their own racks, now they're selling these full Helios systems. That makes it huge for big cloud providers to choose AMD over NVIDIA, giving them a massive competitive advantage. They have all these chips coming out within the 450 series, the 455X GPUs, and to add on this, they have in the CPU market, Intel came out and said in their latest conference calls that they could not meet the demand for the sector. This means that AMD is going to have a clear monopoly in that sector, and they only have to sell 10 to 15% more of their chips to sell out for the year. And analysts have even said that they're raising the prices on those CPUs. The CPUs are the chips that go in a computer, and they're going to be able to increase on a bottom line due to their gross and net profit margin because of those, while they gain traction against AMD in the GPU market with the 450 and 455X GPUs coming out in the future. Overall, this is a company that is finally catching up with NVIDIA and is primed to take market share at a lower price and a cost alternative for companies within the future whenever they have to go and spend less on CapEx.
All right, so let's just take you through a little bit of the next 3 to 5 years that AMD came out and reported. So they came out and said that they should have about 35% or greater CAGR in revenue growth per year for the next 5 years. Gross margin is about 55 to 58%. That's very high for the company. That'd be very good. Same with 35% revenue growth, by the way. Anything above that, that's phenomenal. Operating margin about 35% as well, if not greater. That's great. ETR, effective tax rate, coming in at about 13 to 15%. That's relatively low for the company. FCF margin also coming in at negative 25%, and EPS being greater than about $20. So some metrics they have right now, they are trading at a 30 forward PE. This company easily deserves to be trading at a multiple of 40 to 50, if not higher, 55 to 75. The amount of growth that they're bringing in dictates a much greater forward PE than what they're at. That also shows that they're very undervalued right now. Their trailing 12-month PE comes in at 99. a little high, but it's the 12. They had phenomenal growth a year ago, and it'll get back to those levels. And trailing 12-month revenue and EPS growth also at 34.3% respectively and 165%. So right now we're showing you some projections we ran on AMD based on the numbers that they reported. Um, we'll take you first through our bull case. We have them doing about $34 billion in revenue in 2025, which they did already have, and going all the way up to $131 billion out in 2029. Their revenue growth we have doing about 40% because, like Joe said, they do tend to sandbag. So, 35% is what they're reporting. We, for the bull case, are going to have them doing about 40%. Um, that puts the company at about a 65 to 80 PE on the low to high end. That would be pretty fair if they continue to do 40% revenue growth. And if you just take a look right there, that puts the price in 2029 at about 1432 to 1909 with a midpoint of about 1600, you could say. And the price right now is $200 a share, which implicates an 8x from the levels we are at right now.
And just to reiterate on his points, everything, obviously the numbers, if you run them, look great. Even if you go back to the last time, it's trading at a 34 PE. So this is arguing here that this stock should be double the value it is in price today, just from the PE ratios that the stock should get back to trading at. Just in the base case, whenever you're growing at 35% on the top line, 45% on the bottom line with the margins that they're putting up, this gives you an unbelievable PE ratio, so they're so undervalued today. And to get your share price, you do PE times EPS. So if you put on a 60 PE times 5.95 of EPS, we think they're going to do in 26, just with a 45% net income growth rate, that gets you to a share mid price of about $360. So if you want our 1 year price target at the moment, we want $360 is our price target for the next year. But on this channel, we're here for more of a long-term investing strategy. So we're looking in the future. What is stuff that we don't even know today? What are these new chips that they're going to do? So even like Sebastian said, 8x in the bull case. Looking at your base case, you're getting about a 6x, and you're getting an overall CAGR of almost 50% a year is unbelievable in this stock. And if you even go to their base case, bear case right here, compared to the base case, it's not even that. It's pretty low. Like they would have to have such a fall off compared to 35% income growth going all the way down to 20%. They would have to underperform these numbers like nothing before. And if you just look back at these last quarters we have, you see that they beat these numbers every single quarter that they lay out. So you should have utmost trust in this company and Lisa Su and this management's trajectory. Obviously, there's always a bear case that can happen, but realistically, we think this base case is there, and the numbers that you're going to get in the future are really good for this company, and it is a great buy today. I would have bought it yesterday. I would have bought it the week before, and I will love to buy it today.
One last thing I want to touch on. Like Joe said, we do have a long-term outlook on this channel. We do like to focus on the next 1, 3, 5, 7 years of investing. We're not here for any short-term crap. None of this. Okay, we're gonna swing trade in 3 months and get out, and that be it. So we're focused fully on the longer term stuff. But yeah, we would like to thank you guys for watching, and please continue to come in and support the channel.